For decades, the pharmaceutical industry played by a simple, powerful rule: invent a new drug, get a patent, and name your price. This pricing power was the bedrock of the entire business, fueling massive R&D budgets and guaranteeing huge profits for over a decade per drug. But that golden era? It's over. The fundamental link between innovation and automatic high prices has been severed. So what changed? It wasn't a decline in science. It was a perfect storm of three powerful forces. First, global policy. The US, once the high price haven that subsidized lower prices elsewhere, is finally catching up. The Inflation Reduction Act, which allows Medicare to negotiate drug prices, is a game changer. Second, payers got a lot smarter. Health Technology Assessment Bodies, or HTA letters, are now the gatekeepers. They rigorously compare new drugs to existing, cheaper options. If your new, expensive drug doesn't offer a clear, significant benefit, its price gets knocked down. This isn't just a European trend anymore. It's going global. And third, many of the industry's biggest players are facing a patent cliff. A huge chunk of their revenue comes from blockbuster drugs that are about to face generic competition. When your cash cows are about to retire, it's nearly impossible to keep your overall pricing strong. The financial fallout has been swift and severe. The entire sector's valuation has shrunk as investors grow skeptical about future profits. Those once heavenly 85% profit margins on blockbuster drugs are now being squeezed down to 65 or 70%. To put that in perspective, a tiny 1% drop in the final price of a drug can wipe out to 3% of a company's earnings and slash its market value by up to 5%. The risk is up, and so is the cost of raising money. In response, we're seeing two distinct survival strategies emerge. On one side, you have the operational efficiency model championed by companies like Novo Nordisk. They're focused on extreme cost-cutting, lean operations, and massive manufacturing scale to protect their margins, aiming for steady, long-term cash flow. On the other side is the growth acceleration model. Think Eli Lilly. They're pouring money into R&D and marketing to dominate high-demand areas, accepting higher costs now for the promise of future market leadership. Both can work, but the message is clear. How you run your business is now just as important as the science you create. If you need a cautionary tale, just look at Humira, AbbVie's blockbuster drug. The moment it faced competition from biosimilars, its US price collapsed by over 40% in a single year. This shows the risk isn't just losing your patent. It's a permanent price reset for an entire class of treatments. So, what's the new playbook for winning in this tough new world? It's all about defending value, not just setting a high price. First, successful companies are bringing the money conversation into the lab. They're figuring out what insurance will pay for during phase to clinical trials, not after the drug is already developed. It's called payer-aware R&D. Second, they're thinking beyond the pill. They're bundling drugs with diagnostics, patient monitoring services, or digital health apps. This helps justify a sustained price by proving better patient outcomes. Third, they're using AI and data analytics to make their sales and marketing operations hyper-efficient, squeezing more profit out of every dollar spent. And finally, they're changing how they buy other companies. It's no longer just about acquiring cool science. Now, they're buying assets that make them more efficient and resilient, like advanced manufacturing plants or powerful data platforms. The bottom line is this: pricing power in pharma is no longer a birthright. It's a privilege that must be earned and fiercely defended every single day. The future doesn't belong to the company with the highest price tag, but to the one that can masterfully blend breakthrough science with operational excellence and commercial savvy. The market is already rewarding this new breed of pharma company, where resilience is the most valuable asset of all. Thanks so much for watching. If you found this analysis valuable, don't forget to like, subscribe, and hit that notification bell for more deep dives into the business of health. See you in the next video.